sorry, baby, I can't say you. And I'm sorry, baby, that he played you.
Alright, what up, man? Profit Gang, you already know what it is. I'm back again here with another video, and I'm very excited for this particular video because this particular trade I'm about to break down right now is on BTC USD, and it's crazy how I called out this trade last week. I had to rush to my PC to record this video, and I shared it very urgently on YouTube because I wanted people to see how I trade in real time. So I had to rush to my PC, recorded the video very quickly, put the video out there just for people to see what the analysis was looking like. And now that the trade has played out exactly how I analyzed it, I feel like I take it upon myself to come back here and guide you again in terms of backtesting, what to look out for when you're trying to backtest my strategy or the way that I trade. Again, all of these videos I'm putting out here on YouTube are absolutely free, so you can watch them as many times as possible. And if you're new to the channel, I want you to subscribe to the channel, and if you find value in the video, all you have to do is like the video, leave a comment on the video, and watch out for the next videos that are going to be coming on the channel because I have a lot more coming. Okay, I'm basically going to be doing market commentary back to back, calling out trades, walking beginners through the market week in, week out as much as I can, contribute to what the big names are doing out there, and put out valuable content out there as well. So man, without any further ado, let's jump into the market right now. Of course, it's about to be fun. Alright guys, what up, man? Profit Gang, you already know what it is. FTSTW, from the streets to Wall Street. And I'm here once again with another update on a trade that I gave out a few days back. It's crazy how as soon as I spotted this trade, I had to rush. I literally had to rush, and I said it in the video, right? In the last video that I did. This is slowly becoming like a sequel, though. I don't know about what you guys are feeling, but I'm feeling like this is slowly becoming one of those things where I'm doing these videos back to back. I'm following up on previous videos, and I feel like it's going to be a very good thing. But anyways, in the last video that I did, I was talking about Bitcoin, and I literally had to rush to my PC to give out the trade signal in terms of top-down analysis, okay? Because at the time of me spotting the trade, I didn't really spot the actual signal, but I knew what was coming, okay? So I had to rush and did the breakdown, and there were a few possibilities which I'm going to talk about in this video. But yeah, the market played out exactly how I called it, and I just want to walk you guys through exactly what happened and some other stuff that has actually happened, because looking at the market right now, a lot has happened. I called the market when the market has never created this low at the time. So all of this was the buy trade that I called, and of course you can see that we have had a sell trade as well from a supply level that I marked out here. So it's going to be a very interesting video, and of course you want to bring out your pen and pads and take notes from this video, because of course there are a lot of gems within my videos every single time. So I'm just going to go back to the daily time frame, and we can start to look. I mean, the market is looking very beautiful, guys. I don't know about you, but if I can remember correctly, I came at the video from a lot of different angles. I used trend line, I used Fibonacci, I used market structure, and I ended up saying, based off of like the way that I trade, I like to stick to market structure because that's the most reasonable and that's the most logical approach for me. Okay, so to cut the long story short, there were a few possibilities that I was expecting, of course, based off of like internal market structure. Let me know what you guys think about the colors, because in a lot of my videos it used to be ash and black, but right now it's purple and black. I really want you guys to see the internal structure here. So in terms of internal structure, we had all of this. We had this massive break of structure to the upside. Of course, the market never came back to mitigate the order block, the internal order block that was sitting right here. So this was also a possibility at the time, right? The market could have easily decided to use this particular internal order block because it's also a higher time frame order block. Remember, this is coming on the daily time frame. So this was one of the possibilities that we were expecting. But like I said in the previous video, you want to see the confirmation before taking the trade. And guess what? This internal order block now happened to be an inducement. Okay, the internal order block happened to be an inducement level, and I've talked about inducement in a previous video that I did. But basically, there's liquidity resting below this level here, below the order block. So the order block ended up getting induced. Okay, I'm going to change it to red. I'm going to increase the opacity as well, so you can see what the inducement level really means. Now, what do I mean by inducement level? I'm going to go and give you guys a conceptual explanation here. So when we have market structure, especially on the higher time frame, and we have had a push to the upside, something such as this, right? So the concept of internal and external market structure plays a huge role in determining which point of interest is going to be an inducement level. Now, from the external structure, of course, you know, the order block is going to come from the higher low level, which is somewhere around here. So this higher low is responsible for this break of structure to the upside, which is responsible for this higher high. So naturally, you want to look for the last bearish candle around here. That's going to be your order block, and that's going to be your external demand level. Okay, so this is going to be your external demand level. Now, when we introduce internal market structure to the picture, we're going to have something that looks like this. A lot of the times, something that looks like this. Now you can see we have internal break of structure around here. And let's say the market fails to mitigate that level at the time, and of course pushes above, and we now have this new higher high. Now, just using the Fibonacci alone, when we place the Fibonacci from this low all the way to that high, you can spot the golden ratio of the Fibonacci. Now, when we add the idea of internal market structure to this, there is an internal break of structure around this area here. Okay, that's going to make this level here a level of internal demand. Okay, so this is something that we experienced in the Bitcoin trade that I'm breaking down right now, because when the market is now pulling back down, okay, I'm going to remove the Fibonacci for a minute here. When the market is pulling back down, there's a possibility, right? There's a possibility, or there's every possibility that it can react off of the decisional level. We call this the decisional level. It's coming from the internal market structure. We can have our change of character from here, and then we can have our trade all the way back to the upside. Okay, this is only but one possibility. Another possibility is the fact that this can get invalidated. Okay, we can have a reaction off of this. We can have an initial reaction off of this, and early buyers can start to jump in, right? This can get manipulated before we have the change of character, and then we're going to have the trade. Now, this change of character is more so external. Okay, the change of character you're expecting here is more so external, right? What you want to see is on the internal level of this leg, because you know the idea of internal and external market structure, it can be applied on all the different legs of price. So we can have further internal structure within here, maybe on the lower time frame, like the 15-minute time frame. Then we're going to have the first change of character, and we're going to have the earliest trade from within this leg right here. I really hope this makes sense to a lot of you guys, man. I really hope this makes sense. Now, having done all of this, let's jump into the market. So in this particular example, this is invalidated. Okay, so we have this massive pullback into the origin, okay, of the break of structure. If you can't come up with this right off the top of your head conceptually, trust me, you don't know what you're talking about. And I'm not saying that to be rude. I'm just saying you must have gone through the process of, you know, building your experience to the point where you can almost imagine what's going to happen next in the market. Okay, it's called intuitive speculation. You can almost imagine what's going to happen next in the markets. Guys, Trust me when I tell you this, okay? When you understand market structure, you have no use for a lot of other concepts, right? Because market structure at the end of the day is what's going to be fulfilled. The fulfillment of market structure, right, makes a lot of other things it makes a lot of other things look like these were just byproducts. Because if the market is going to come back to this order block here, of course it's going to take out all the liquidity. Now a lot of people say liquidity is why the market moves, but I tend to disagree. Okay, the market moves because of buyers and sellers, but at the end of the day, the buyers and sellers cause the liquidity because of there's a lot of manipulations in the market. But I don't believe that the market moves because of liquidity. I don't believe that the market is targeting certain liquidity. The market is just moving. Okay, we oftentimes we want to look at the market as something that is very, very superficial, but this market is just moving. We are not the ones in control of the market. There are bigger players who make the market move. Okay, we are not the ones in control of the market. We are only observers of the market. And what we have observed about the market is that in an uptrend, okay, the market always comes back into a certain level and buys again. This is an observation, it's not really a strategy. Okay, another observation that we have made is the fact that if we have a downtrend and a downtrend is going to reverse back to an uptrend, there has to be some form of change of character that tells us that the market wants to go back. Now, the change of character is not a guarantee that the market is indeed going to go back up, because the market can change character and still continue to the downside. This is 100% possible, and we can have something that looks like this that continues the downtrend. But if this market is going to reverse back to the upside, then we have a bit of confidence that if the market hits a demand level, of course, demand by definition is where people are willing to buy. If the market hits a demand and is conditional if the market hits a demand, meaning that if the market doesn't hit a demand and we have a change of character, the change of character means nothing. But if the market hits a demand level and then, okay, there's a chain of events, it's not just, oh, the market changed character. No, it has to hit a demand level first, then change character, then we are going to have a new order block that we can now trade from. Now, irrespective of the fact that it's possible for the market to totally decimate this order block, there's a high degree that the market is going to take off from here based on observation, again, not based on strategy. Okay, so in the 4 years that I've been trading, this is my observation about the market. All of my buy trades look like this, and you can go back to my previous videos and validate what I'm saying. Now, having said all of this, again, I called the trade last week on Bitcoin. So let's go back into the market and let's see exactly how the trade played out. But again, like I said, I just wanted to come here and give you guys a follow-up video on the video that I did last week. All right, so let's go into the market right now. Let's go to Bitcoin price action. So of course, this is the order block we're concerned with. We said this one here was induced, so it was invalidated. That's not the order block we want to be looking at. I'm going to remove some of all these things. Now, basically, we're trying to now break down this particular order block. Now, I'm going to show you on 2 different time frames, okay? So we have our daily time frame on one side. That's going to be our daily time frame on one hand. And we're going to have our 4-hour time frame. I'm going to be refining this to the 4-hour on the other hand. All right. So basically, around this same area here that we have on the daily, we have a 4-hour order block within the daily order block. So if I mark out this area here, you can see I'm marking out the exact same area on the daily time frame. So I'm refining this order block now, and the way to refine that is to go to the 4-hour time frame, use the 4-hour structure to get the 4-hour order block. Now the 4-hour structure here, so permits me to remove this since we know exactly where we're looking at. So the 4-hour structure is, we have low creates high, high creates low. Mind you, we are failing to go lower than this. We have a break of structure to the upside. Okay, we're breaking this structure internally. We have a high. We have this here as a low. Notice how this candle is a bearish candle, and we have massive selling opportunity before the market rallies to the upside, failing to come back down to mitigate the 4-hour order block. Okay, guys, the 4-hour order block. Now, mind you, just based off of like we have different types of smart money traders. Some people like to mark out their order block from the open of the candle, something that looks like this. All right. Some people don't really consider the wicks as part of the candle when they're marking out their order blocks. All right. But personally, I like to mark out from week to week, regardless of how long the order block is, because at the end of the day, I'm going to be waiting for certain confirmation. So it's not the size of the order block that matters, it's the confirmation that I get out of the order block at the end of the day. But for this example, maybe I'm just going to leave it at the open. I'll probably just leave this at the open. I believe it reacted off of the open too as well. So this is the 4-hour order block that we have derived from the daily order block, guys. This is the daily. Now that's the 4-hour. You can see how the daily totally engulfs the 4-hour, meaning that the 4-hour is saying it's good to buy from this demand level. The daily is also saying it's good to buy from this demand level. Two time frames are basically in agreement, which makes that level a stronger demand level. Okay, we're going to take this further to the 2-hour time frame and refine it once again. Guys, if you want to see the full detailed analysis, you can go back to the previous video I did on YouTube before watching this one. All right. Now, once again, on the 2-hour time frame, based off of the 2-hour market structure, you can see how here the 2-hour, based off of how I draw my order blocks or how I mark my order blocks, the 2-hour is aligning with the 4-hour almost totally. Okay, this is the 2-hour order block, this candle here. But again, a lot of people like to mark out their order blocks from the open. Okay, so for the sake of argument, let's put this at the open. And again, if you check on some internal level, we have more internal structure coming from this area here, where we have low, we have high, we have low. We are seeing a break of structure here internally. We have a small pullback. We have the market rallying. But I mean, the market seems to have mitigated all of this here. But for the sake of argument, let's say the market never mitigated this internal order block. Now, this particular part is more advanced. I didn't really touch on this in the breakdown that I did. So let's say this is another level of internal order block on the 2-hour time frame, or internal structure on the 2-hour time frame rather. Okay, so let's see if the market reacted from these levels. Boom, guys, you can see this. The market reacted right off of the internal level on the 2-hour, meaning if I would have used that 2 hours as my entry, I would have gotten a very good risk to reward. Okay, look at it right there, the 2-hour internal. So once we have 3 time frames in alignment, that can definitely be your entry. That can definitely be your entry, but that's not the entry I'm going to be breaking down. So this is an entry in it of itself, and only advanced smart money traders would understand this. That's an entry right there. Wow, that's a 1:15 trade right off the bat. That's a 1:15 trade. All right, but that's not even the entry that I'm talking about. Remember, the entry I'm talking about is a confirmation entry, meaning that I've refined this from the daily. So this here is the daily, or let me just daily level, 4-hour level, and this is 2-hour level. Now I'm going to remove this one, that very, very internal one, because that's not the trade I'm going to talk about. So you can see how I've reduced the size of the order block basically with the refinement. Okay, on the daily, the range of the order block looks like this on the daily. Okay, on the 4-hour, the range of the order block on the 4-hour is smaller, and of course on the 2-hour the range is smaller. but we still want to see the confirmation. We still want to see the confirmation on a lower time frame. So I'm going to go straight into the 15-minute time frame and show you guys the confirmation. All right, I'm going to go into the 15-minute time frame and show you guys the confirmation, just because I don't want to make the video too long. I just want to show you the confirmation. Now, this is the confirmation on the 15-minute time frame, and look at how the trade played out. All right, so looking at this on the 15-minute time frame, I don't want you guys to get confused, right? So I'm going to map out the structure here. Starting from this high, we have this as a low, we have this as a high. The market runs down all the way here, we have this as a low. Comes back here, we have a high, and this is the high that created this low. Because I know a lot of you guys would argue and say this is your change of character. But that's not your true change of character. That may be an internal change of character, but that's not the true change of character. The true change of character is here, because this is the last high that created the last lower low. Notice how we already reacted off of the daily and the 4-hour at this point in time, and there was a massive rejection. The market pierced back into the level, into the daily, 4-hour, and 2-hour. Then we had another rejection that pulled back to break structure here. So this is now the new order block, which is the entry. Okay, so this entry is slightly larger on the 15-minute time frame because of the size of the order block. But again, you can refine this to lower time frames and get even smaller entries. But I'm not going to go through all of that in this particular video. Okay, so here on the 15-minute time frame, based on the size of the order block, we are having a much smaller trade of approximately a 1:5 risk to reward. Okay, a 1:5 risk to reward. Now, to show you that this system or this strategy or this school of thought is very, very consistent in the market, I took another trade today on BTC around this area here, and I'm going to break down that trade right now. So let's go back to the daily time frame. All right, so having come back to the daily time frame, here's exactly what happened, right? So the market reacted off of this. We had a low, and then the market created a high. So this leg already obviously was printed, right? As soon as I saw that leg, there's not a lot of details on the daily time frame that I can work with, but I can see some type of structure in there. So I can see this as a low, I can see this as a high, I can see this as a low, and I can see this as a higher high. Now, as soon as I saw this daily order block, and I knew for a fact that this daily order block was going to be induced. So this ordinarily would have been a daily demand level. No, that would be a daily demand level. Okay, you want to be mindful of your templates. Now, on the daily time frame, I can't really see any other demand level at the bottom here because of the wicks and everything. So I had to go to the 4-hour time frame. And on the 4-hour time frame, I found this on the internal structure. Okay, so 4-hour, I found this. So we have low, we have high, we have low, and then we have a break of structure to the upside. Notice how the market never came back to mitigate the order block. Remember, I said I'm not necessarily looking for liquidity. I'm looking for the fulfillment of market structure. For the fact that the market did not fulfill the mitigation of this order block here, that is what created the liquidity underneath here. This is not the market makers manipulating price. Well, you could say that, but again, this is based off of observation. Okay, this is based off of observation, right? So we had this high, the market is mitigating this level here, and then we have this explosive push to the upside. Mind you, all of these levels are the same. This that high right here, and this is this low right here. Now, using the 4-hour time frame, I realized that we have liquidity resting underneath this level here, because obviously if the market is going to come back and mitigate that order block, then it just has to take out this liquidity. It's a byproduct. Okay, the liquidity, the grabbing of liquidity is a byproduct of the market fulfilling the mitigation of the demand level. Man, my mouth was so dry. So anyways, I want to show you guys the confirmation on a lower time frame. Now, of course, I would need to refine this level. I mean, we know that this was liquidated, so let's just remove it. Let me make the chart a little bit clean. I just want to show you guys the confirmation. I want to show you guys the consistency of the system. I want to show you guys the consistency of the strategy, okay? Because this is something that's definitely 100% repeatable over and over again. In different asset classes, whether it be currency pairs, the stock markets, the crypto markets, the commodities market, talking about things like gold and the indices market like US 30, NAS 100 and things of that nature. It's all structure, guys. So refining the 4-hour level now. Now, mind you, the way I marked out this order block, normally you want to take this as your order block, but I took this as the order block. Why? Because the market actually pulled up, sold a little bit before it bought off. So naturally, just going off of the laws of order blocks and things of that nature, I want to take this as my order block. That's actually the correct order block. But I mean, I have a few tweaks to my system where I borrow some retail ideas. So I just take this candle just because, like I said, from the week to the week, it engulfs this one. And this week is telling me that there was some type of selling intention. So that's why I took it from there. And of course, it's still covering the order block at the end of the day. So I don't really mind. So that was the order block on the 4-hour time frame. So let's take it to the 2-hour time frame first, refining that level. Now on the 2-hour time frame, you can now clearly see again we have an inducement level once again. And as soon as I saw this, I was like, damn, what do I do? And guess what? I'm not gonna lie to you guys. I took a loss off the first level. I took a loss off the first level of inducement. Okay, because I had 2 entries set, and you can see how the market reacted from the first level. Massive rejection of the first level. I had a limit. I had a limit sitting right there. I had another limit sitting right there. Okay, so I had 2 limits sitting right there. The first one reacted and I was in profit. Boom, it got taken out. Okay, the first one got taken out. Now on the second one, I want to show you guys, irrespective of the fact that I took mine off the limit, I want to show you guys the confirmation on the 1-minute time frame, guys. And you would find this absolutely mind-blowing because again, the market is fractal. You see, I'm dropping gems. Okay, the fractal nature of the market states that market structure is market structure on any time frame you go. Meaning, if the market reverses in this way on the daily time frame, okay, the market is going to reverse in this way on the 1-minute time frame, 5-minute time frame, 15-minute time frame, whatever time frame it is. Now, look at this on the 1-minute time frame, guys, and tell me if this is not the exact same pattern you can see right there. Okay, so here, I'm going to take it right off that low. Oh shit, I missed that. I'm going to come back for that. Okay, so we have low, high, low. Now, mind you, we are piercing into the the 4-hour order block and the 2-hour order block simultaneously. Remember I said 2 time frames agreeing at a particular level shows strength at that particular level. Now, that's your confirmation right there. That's your confirmation right there. And if you look again, okay, this is the idea of internal and external market structure. Now, this is how you can absolutely refine your entries like a motherfucker. Trust me. So you see, internally, we have this failing to come back to mitigate this order block. Here, the market runs off, leaving liquidity. Guys, this is on the 1-minute time frame. That's your liquidity right there. But again, the market is really not seeking the liquidity. That's my belief. Okay, I know this is going to be huge conflict out there, but again, this is my belief, right? This is absolutely my belief, 100%. All right, and this is what I believe. The market is not really seeking liquidity. The market is seeking to mitigate the order block. But if the market is going to mitigate the order block, then it has to, because the liquidity is in the way. It has to sweep the liquidity. as a byproduct of trying to get to the order block. Guys, look at the precision of this entry, guys. Look at the precision of this entry. Let's check out the risk to reward on this particular trade. So once again, if you want to learn all of this in a very detailed manner, you want to purchase the course. I'm going to put the link in the description below. You want to purchase the course. You want to learn this from a foundational level before you get more advanced like this. All right. So risk to reward wise, we are already at a 1:7 at this level. And this market coming to this high right here, we have a 1:13 risk to reward trade on Bitcoin. So I'm going to end the video right here. Do this information, whatever you please. I really hope you guys gain value from the video. Once again, if you're new to this channel, I want you to like this particular video, leave a comment, tell me exactly what you learned, and of course, subscribe to the channel. Profit Gang, man, you already know what it is. Gang, gang. I'll see you guys in another one, man.